So let me get the Facebook Live going, and then we'll kick this off, all right?
Yeah, sorry again about the setup inconvenience.
All good. No
But
problem.
as long as you can hear me good, then I guess that's all that matters.
Yeah, it's crispy. It's really good. So don't say anything because we're going live, all right?
Yep.
All right, welcome back to another episode of The Influencer. Today I've got somebody that I grew up with, and I'm really excited to introduce you guys to. This guy has done many things, has succeeded in a major way, and he's truly a stock market expert. And so what I wanted to do is bring on my good friend Justin Vogt onto the show, talk through some strategy. Justin, welcome. Thank you so much for being on the show.
Thank you for having me. It's an honor to be here with you. And likewise, to everything you said about me, great introduction. And, I feel the exact same way, proud of you, seeing all the things you've done and accomplished and expanded. So, fate has brought us back here once again. So
that's right. It was just a matter of time, right? And so
yeah.
I think the audience, you guys should get really used to seeing these two faces together, because I think Justin and I were just talking off air. We'll be doing a lot more collaboration work. So let's jump right into it. Justin, for the people that don't know you, you've got a Facebook group. Walk them through essentially what it is that you do as it relates to the stock market.
Well, really, it just kind of started out as something fun during this recent quarantine where a lot of my friends knew that I've been in it for years and were just kind of like, hey, Justin, what do you think of this stock? What do you think of the overall market? And it just got to the point where I'm like, okay, obviously, I guess there's just a need for very basic, as you said, and just general knowledge, and just to kind of help people get over the intimidation of being in the stock market. I think there's a big misconception out there that you have to be wealthy, you have to have millions of dollars, otherwise you can't be in the stock market, and it's not for typical average Joe Schmoes like ourselves, if you will.
Love it. I love it. So, all right, cool. So I got a couple of questions. My goal for all of you guys that are watching is to get some tangible information, because the world right now is filled with information, but it's all about the execution of that information for you to get a result in your life. So Justin's going to give you some practical advice so you can leave this video with something to execute on. So my first question for you, Mr. Vogt, is, of all the things out there for ways in which people can make money through investing, you've got real estate, you've got, cryptocurrency, you've got the stock market, you got all these different things out there. You got flipping cars, you've got, wholesaling. Why the stock market for you? Why that niche versus anything else?
Well, first of all, I do dabble in real estate, as you know, and stuff like that. But what I like best about the stock market, my wife and I do have some residential and commercial real estate investments, which have worked out very well for us. So I'm certainly not really want to prefer one or the other, but I do kind of prefer the stock market in all honesty over, because, again, you've mentioned, me very well. We've worked together in various different businesses, and the stock market, in my personal opinion, is just less work. And what I mean by that is, you don't need a few $100,000 or a hard money lender to flip a home. Assuming you don't have the capital, you can start with a very little amount. You can start with $500, $1,000, whatever your budget is, and kind of build over time there. There's no city permits to deal with. There's no, the house is by a main road, but the buyers don't like it so much. There's no back and forth negotiations as much. There's no employees, salespeople, CSRs to deal with. It's just me and the market, and that's what I personally love about it. And where, if there's a mistake being made, that's on me. I can't blame, well, it's just not, it's the slow season right now. It's wintertime. Or, oh, there's this going on. Or even something like COVID, heaven forbid that's going on right now. I mean, that was the big thing that got this thing really going, was when it took that massive dip in March. I was the only guy on social media or anything telling people to buy. And, they just announced it's up about 45% since March. So I'd say, and again, I'm not trying to say I'm always right, of course. But, looking back, I guess it was a pretty good time to get started in the stock market specifically.
Love it. And that makes total sense. When I think about everything you just said, business is very complex, right? You've got people and payroll and all these different things and leases and real estate. You have all these tangible things you got to mess with. To your point, and it makes total sense to me, because I was thinking about these questions, and I'm glad that you said what you said, because that's kind of what I was thinking about, right? Like, I don't know as much about the market as you do. I'm hoping to learn today too. But what you just said is exactly right. It's like man versus machine, right? You don't have to deal with any other humans.
Or you versus yourself.
You versus yourself. Makes a ton of sense. So, what are some common mistakes that you see new investors making that you think people watching can just avoid altogether?
How long do we have? The number one thing, and how do I know this? Well, because I myself made these mistakes. So we look at these blue chip stocks, and I'm not a financial advisor. I'm not advising anyone to buy these stocks, but my largest position in my personal portfolio is Apple, for example. People look at that stock and it's boring. Maybe it moves a couple percent a day here or there. They find themselves more attached to these exotic stocks, these penny stocks, these cryptocurrencies. And I have nothing against my cryptomania out there, but people want these 100% one-day movers, and there's a 99% chance you're going to lose money dealing with those more exotic, more sexy, if you will, bigger movers. And that's the biggest mistake people make, is they don't understand that if you're sticking to good, well-run, fundamental, blue chip stocks, just off example, like an Apple, like an American Express, like an Amazon, yes, there may be some volatility and there may be some short-term downfall, but over time, I had a friend of mine, much older than me, he's about 10 years away from retirement. He owns Apple, and he owns hundreds of thousands of dollars worth of just Apple. And we were talking about this a month or two ago when the stock was at about $250 a share. Justin, should I sell it? It's at a 52-week high, or maybe it was around 300. And I'm just like, well, let me ask you. It's very simple. It's a very simple question to ask anyone. Do you think Apple stock is going to be worth more 10 years from now than it is today? And without even any hesitation, he goes, of course it's going to be worth more. Okay, well, if you're telling me you're 10 years away from retirement, then why are you even contemplating selling it right now? So I think the problem is, you and I are around the same age. We're in our mid-30s. So if I'm looking to keep my money in there for 30 years, right, I'll put myself out there. I own a ton of Delta as well. And Delta has been hammered these past few months. I've been doing some dollar cost averaging, but I'm not worried one bit. Like, I'm not freaking out, because I'm not looking to sell it for another 30 years, if anything. So people just need to understand their timeline. Don't put money into the market that, you live in a home, right? So it's probably pretty safe to say that our values may or may not, you would know more than me, took a little bit of a hit right now. Okay, so then are we going to run off and sell our homes right now? No, we're probably going to say, the majority of people are going to say, I'm going to hang on to my home. I'm going to wait this out, and I'm sure it'll be worth more down the line. And by no means am I suggesting values have gone down. You would know that more than me. I'm just using it as an example. Most people are going to say, hey, no problem. We'll stay in our house for a few more years. And when the market goes back up, then we'll look to sell. The exact same thing when it comes to stocks. I mean, there's really not a huge difference between them and the real estate market when you look at the fluctuation in values. And over time, what has the real estate market always done? What has the stock market always done? It's gone up. Now, if you take chances and you buy risky real estate, like say a mall or retail space or restaurants, heaven forbid, then you're taking bigger risk, one way or the other. And the stock market works the same way. But if you invest in good residential homes, good areas, or commercial, whatever the case may be, over time, they're gonna go up.
I love it. And the thing that you said that I have been screaming from the mountaintops, whether that be with agents at my company or real estate agents that I coach across the country, or general business advice, is I think the problem, Justin, is that people are, they are addicted to instant gratification, period.
I was one of them.
Yeah, we all were.
I know firsthand.
We want everything, and we want it now.
Yes,
and the problem, I think, with the world and business and relationships and the stock market, from what you're saying, it's the same problem. People put money in and they want to get, they want to hit the lottery. Everybody has that lottery mentality. And if they don't, they say, oh, that doesn't work. And they're off to something else. So that makes a ton of sense.
And it's horrible too, because now they're out of the market altogether.
Yes.
Or if they would have just hung in there, it probably would have worked out for them in the end. But yeah.
Makes total sense. So can you kind of walk us through a simple high-level strategy that some advice that you would give to a new investor on how they would get started? I know you recommend some apps out there, and then can you give us a high-level strategy?
Yeah, no problem. Obviously the apps, those, if people join, it's Financial Street Smarts, as you mentioned before. Thank you very much. And I just recommend a couple apps, those like Robinhood, Webull, Doe. They're good beginner apps. Now, my main portfolio is through a bigger broker, which I would say that's the route to go. The problem was, typically they involve paperwork or a face-to-face meeting, and realistically, people just aren't going to do it. One thing you said that I'm glad I remembered to remind myself, you brought up how execution is so important. Well, I can tell you right now, 50% of what's very important is just starting a trading account, just starting a portfolio, like just literally taking the time, whether it's Robinhood, whatever, and taking the 5 minutes to set up your own stock, portfolio. Put $100 in there, whatever, and just by getting started, that is 50% of the battle. So a good strategy for anyone getting started, like I tell, is put together a good watch list. Try, if it's not broke, don't fix it. Take my good friend, not, he's a good friend of mine. I'm not sure so much I am with him, but Warren Buffett, for example, I'm wearing some of his merchandise from the last shareholders meeting I bought. And first, stick with companies that understand, like, and trust. So, for example, which I learned the hard way about this, I took a stock tip from a friend of mine years ago. It was a company called Broadcom. I have nothing against them. It's actually a pretty wonderful company, but I knew nothing about it. All I knew was my friend, who knew more about the stock market than me, said, hey, Broadcom, grab it. So what did I do? I went way heavy. I knew nothing about the company. Out of nowhere, they were going through some legal issues, and the stock plummeted 10% in one day. So I then, knowing nothing about the company, knowing nothing about the fundamentals, freaked out and sold at a huge loss. Now, let's say, let's take Apple, for example, and it sounds like I'm trying to promote Apple, but or a Delta, or any of these companies that have gone down heavily, I'm not worried one bit, because I'm saying to myself, it's Apple. Heck, let's use Zoom. We're on a Zoom conference. I bought Zoom back at about $64 a share. Go ahead and take a look at Zoom whenever you guys get a chance, where it's trading at now. Huge position of mine. And because I knew you're using Zoom, I'm using Zoom, everyone's using Zoom, it's beginning to grow in popularity. And even when things do get quote unquote back to normal, I think the way we are conducting these kind of meetings and stuff is going to probably still be in favor, even when we can do the more. I think companies are realizing the efficiency behind it. They're seeing the money that they're saving on their bottom lines. And Zoom could go down 50% tomorrow. I wouldn't sell a single share because that's how confident I am in the company's overall fundamentals. Heck, I would probably just buy more, if anything.
Let me ask you this. So the watch list, right? So, and
Yep.
by the way, I agree with everything you just said as far as the future of business and being more virtual than bricks and mortar. And I think a lot of companies are looking at that as a strategy, saying, do we need to spend all this money on buildings? That's a separate conversation.
Sure. Agreed.
What is a watch list? What is a watch list? How does someone put it together? What's the first thing they've got to do? Okay.
So whenever you go on any platform, there'll be an option for the watch list. And then what that is that's going to be your own personal watch list to put together companies you like. So I'm just sticking with the same companies because I've mentioned them. So let's say you as well like Apple and Zoom. Well, then, to really get super basic with it, you got to go by what's called their kicker symbol. Okay. So that's going to be, so for Zoom, for example, Zoom's kicker symbol is ZM. So you don't type in Zoom in the search engine, you would type in ZM, for example. And then you'll get to know them like me once you get very familiar with it. But you could just simply Google Zoom's kicker symbol, and then it's going to tell you, and then you would add that to your list. And some platforms, if they're advanced, they might then, through their artificial intelligence, refer you to that kicker symbol. Apple is for example, with their stock app, they do that, where if you just type in Zoom and search it, it will show you, it'll bring up Zoom ZM. So you want to make sure, because sometimes there will be another company called Zoom Tech. So now you think you're watching Zoom. Holy crap, I saw Zoom was at $250 a share. It's now at $5 a share. I'm going to buy it, but now you're buying a totally different company. So that's a rookie mistake I have also made. Not with Zoom in particular, but where a company's name was very similar. So you've got to make sure that you have the correct kicker symbol in there. And then when you put that list, together, Zoom, Apple, Delta, American Express, come up with the companies. Then I'll do some more research from there. I can get into that if you would like, some more basic things. But first, I think the most important thing is pick companies like, understand, and trust. Put that watch list together. Then you can kind of narrow it down from there. So I'm certainly not saying just go buy Apple because you own an iPhone. That's certainly not the case. You want to do further basic research from there, and then you can kind of get a better idea. Okay, is this stock undervalued? Is it overvalued right now? So again, just using Apple as an example, I own Apple, and I'm not saying this to brag, of course, but I own Apple around $160 a share. Again, take a look at the price right now. And
what is it trading at right now?
Probably around 350. And why did I have confidence in that? Because I have an iPhone, I have an iWatch, I have an MacBook, whatever they're called. I have an iPad. My wife has 10,000 photos all embedded in the iPhone ecosystem. Yeah. I pay that $299 a month without even thinking. Like, I have an Apple TV. I will never leave Apple simply because I just have way too much invested in their ecosystem. So just from a service standpoint, I don't care if the new iPhone isn't the next, the best thing from sliced bread. It's more of a consumer staples company at this point, like a Heinz ketchup or a Hidden Valley Ranch. It's just something where you're just never going to leave, at least for me personally, maybe some people, but I'll never switch over to Android, regardless how subpar Apple's new phones are in comparison to Android. I'm too used to the ecosystem.
Yeah. Let me ask you this. So that makes sense. And so they put together a watch list, right? So let's say there's 5 companies. They say, I'm really interested in these companies.
And 5 is really all you need to get started. I mean, you don't want to get too, you don't want to get too crazy. So 5 is a good round number.
Perfect. So they pick 5 companies, and I'm assuming, I don't know this, the watch list means You watch what this thing does over the next couple of weeks or something. Before you put your money out there, you can kind of watch and say, okay, if I do this, let me see how that would work. And by your first piece of advice, just getting started puts you in the game to start learning.
You're already ahead. You're already ahead of most of the people. You're already ahead of, like so many people are intimidated, and it's so like, I just can't describe the feeling. I'm sure you know the same feeling with you helping out your agents in the same way, but to have these people like, oh my God, Justin, I would have never gone to the stock market, without you. And not even necessarily them taking my advice on individual stocks. They're just like, I like this company a lot. I did the basic research, like you said, and now it's up 50%. Thank you so much. I love this. And you feel good. Like me and my wife will go to the grocery store, not so much right now, of course, but like when we would, she would grab an item. Whoa, what's the parent company of that? Okay, no, we don't own, that's General Mills. We own Kellogg's or vice versa.
That's great.
Put that back. I want you to get the Kellogg's version. And so it's just, it kind of makes things a little fun in that sense. And, but then again, there's going to be other companies or stocks. And I don't mean to make them look bad, but like a Ford, for example, I love Ford. Most of my party buses for my limo company are Ford. Great product. I do not like the stock though. I think it's very overvalued. I think their best days are behind them as far as the stock goes, for example. So you got to watch yourself also not falling in love because you love the company so much doesn't necessarily mean the stock is a good investment.
Love it. All right. So they watch these, they start putting some money into some stocks. How does it work? A lot of people see a lot of TV shows like they do in real estate. They think it's very sexy and day trading is a very popular thing.
Oh yeah. That's what everyone wants to do is the day trading.
Right. So like, that's the thing, right? So how does it work? You're on an app like Robinhood. Can you sell and then it immediately goes in your bank account? Like
everything. Okay. So okay. These are good questions. So you're going to have what's called a settlement date. So when you sell, and another thing you got to keep in mind, so I don't forget, guys, there's also a lot of tax consequences, just like in the real estate world, if you sell prior to 12 months of ownership. So you're going to have what's called short-term capital gains and long-term capital gains. So just like in the real estate world, so that's another benefit to holding on to stocks for at least a year because your taxes are going to be pretty much cut in half. And that's something a lot of people don't really consider either. So, but anyways, so you're going to have a settlement date. So you buy some stocks, they go up. And if they go up crazy, don't get me wrong, I will sell. If I'm just like, okay, this thing's way too high for no reason. All right, we're just going to at least take the money I put in, right? And then I'll just let like the rest run. But you will sell that. And then it takes typically 2 trading days to settle in your account. Once it does that, then you can, move the money into your bank account if you want from your brokerage account. However, in the grand scheme of long-term investing, I would highly advise people just to take it even a step back further. Don't put any money into this account that you plan on using anytime soon. And the reason for that is with the laws of compound interest, you can take a compound interest calculator. If you were to just keep the money in there and it's making an average of, let's say 7%, my daughter, again, not to brag, she's got a pretty nice account we've, put together for her. She's 15 years old. We wouldn't have to make a single deposit. I promise you, it's not as much money as you probably would think or your viewers would think. And she will easily have 6 figures by the time she's ready to go to college. And we're not talking about a ton of money. We're just talking about a modest average compound interest return of 7% a year. But then by leaving the money in there and then making 7 on that, so on and so forth. Again, I mentioned before, look at Warren Buffett. Look at his net worth. If you see by the time he was 50, that's when he started really making big dollars because his fortune, his nest egg got so big where that compound interest just really started to take effect. And it just snowballed into this giant net worth he now has.
Well, it goes back to what we talked about at the beginning of the show, which was delayed gratification versus instant gratification. I try to teach people to fall in love with delayed gratification, which is the I'll show you right here, which is the compound effect, right? So that's
and I did not see that book in the background prior to what I said.
Yeah, so that's the deal, right? So that makes a ton of sense. So after someone kind of has their stocks, right, and they kind of know a little bit, is it something like a mutual fund where you contribute money all the time and you're doing it like that, or
it's whatever you want to do. So what I always suggest to people is you want to, let's just use a round number of $1,000. That's a realistic amount. So you have $1,000.
Okay.
I would try to come up with like a monthly amount, like think of it as almost like paying another bill. And you of all people know, I'll put myself out there like that. I used to spend the money just as fast as it came in. So when I discipline myself to put it aside, then now the money's gone, like as if I blew it anyways, but then yet it's over here going to work for me.
Yeah.
And now it's like, holy cow, look at all this money I have over here now. I totally forgot about it.
Yeah. So let me just clarify. So are you suggesting or recommending that what you're talking about, the stock market and using some type of app as a potential retirement account that you just put in there and you just keep contributing towards it?
I think it's whatever you want it to be. So again, maybe my daughter at 15 months old, maybe it's a college fund for her. So I plan to sell it all in 18 years. It's really whatever you want it to be. And I know that's kind of generic, so I'll try to break it down more. Come up with a goal. Why are you doing this? Why should you be saving money? Why do you want to start? Do you think it's fun? Is it viewed as a fun savings account? That's how it's viewed for me.
Right.
Do you want it for retirement? Do you want to buy your wife something nice for your 10-year anniversary? Do you want to put your kid in college? I think that's, see, again, God bless you for help keeping me on track, because
Brian, it's hard. You're a wild tiger. I got to keep you.
Yeah, I'm all over the place. So you almost got to do, why are you doing this? And come up with that goal, So I think both of us, like, I probably, from my businesses that I work in today, make less money with them than I did a few years ago when I was younger and really grinding hard. But I have a much bigger net worth, and I'm making more money overall thanks to real estate, thanks to stock market, thanks to other, passive investments that I have, and I'm overall much happier. So maybe so for me, I'll just try to, shorten this up. And so for me, what my goal is I want to build this portfolio. I want to hopefully one day either be in companies that pay nice dividends, or eventually they get built up to dividends. I always reinvest the dividends back into buying more stock. That's what I do right now in my mid-30s. And then in hopes when I'm 30 years from now, I turn the dividends on to receive it as an income, and me and my wife can live off those dividends. If we got, say, 50, 60,000, we do absolutely nothing. And then I can leave the account hopefully to my daughter, or, if we have more children, and then hopefully they, pass on the tradition, even though 80% of time inheritance blow their inheritance, and it doesn't make it to their next generation. So that's another goal of mine, is I want to try my best to make sure my kids aren't part of that statistic and become part of that 20%.
Love it. All right. So check this out. Just a challenging thing. So what would you say to somebody who says, well, Justin, why would I go and try to recreate the wheel? I'm not in a stock market. I'm an engineer at Ford or GM. Why not just put into a mutual fund that I get recommended from Vanguard for say, that has a long history? Let's let the pros do their thing instead of me gambling. Why even mess around with the stock market? Let me just go put this into a Vanguard fund and let it ride.
That, and you know what? Nothing wrong with that whatsoever. That is probably what the majority of the people should do. for me personally, because I can only speak for myself, and from all the people in the group that they seem to share my same logic, is I simply won't invest as much. Like again, it'll just seem like it's a boring thing to me. So if you, Brandon, put, let's say we were both putting whatever, $1,000 a month. Like you pick your mutual fund or index fund, which I would personally suggest a low-cost index fund because you pay much higher fees on mutual fund. And I play around with the stock market. Maybe with me personally, because I know a little more, maybe I have a chance of beating you out, but odds are you're going to beat me out over time. But I personally won't put as much money. So I'm motivated. Like when the market crashed and went down and there were individual stocks such as a Delta, such as a Shake Shack, such as a Disney, I ran to the bank to buy more of those shares and put more money in it. If it was an index fund, I probably wouldn't even have done that. I probably would have been like, whatever, just put our $1,000 in there every month like we normally do, and hopefully it'll go up over time. So it just simply motivates me to invest more, and because of that, from a dollar, so maybe percentage wise you'd be better off, but from a dollar standpoint, I will have more money for myself down the line because I simply was more motivated to invest more of my money because I'm having more fun with it. And I feel that if that is going to encourage you and you're doing it the right way, safely, good companies, for the right reasons, I believe more in that philosophy because I just simply think you're going to be more motivated to put money aside versus a boring old mutual fund or index fund. And not everyone's like that. There are people that just simply, I don't want to do any work. I don't want to do any research. Absolutely, that's what they should do. But are they going to be that motivated to contribute to it years from now?
So what you're saying is the old saying, what you pay attention to grows. So what you're saying, like if someone were to track everything they ate for 30 days, it's almost guaranteed that they eat healthier.
That's a great analogy. That's a great analogy.
So that's what you're saying is because you're paying such close attention to this thing that you find enjoyment in it is because of that attention that grows, right? So that's essentially what you're saying. So the next thing is
flipping a home versus a rental. So the flipping is way more exciting, way more exotic, way more cooler. Oh my God, HGTV! Like I'm gonna be the next flip superstar. I at least know from my personal experience, I prefer rental properties. I like as an investor, I prefer the rental because it's the long game. And it gives me that income, and it's a lot less risky. I mean,
that's right. Yeah, everybody wants the quick fix. It keeps going. What I keep hearing you say, it goes back to this human error. I'm going to call it a human error that we all have, and it's this addiction to instant gratification. Period. So the other debate, and we'll end with this: the great debate versus whole life insurance. Or buy term insurance.
Put me on the spot now.
Yeah, of course. It's got to be a little drama. So I want your opinion, all right? So you got these three buckets.
Man.
There's these two schools of thought, right?
Okay.
Some people are like, well, listen, you can use whole life insurance as this financial tool for tax savings. You can borrow against it. It's tax-free. That's what the wealthy people do, use as their own bank. And then there's another school of thought that says, do never do that. Buy term, invest the rest. What is your opinion? Not right or wrong, good or bad. What do you believe?
I'm going to say, again, I got to give you something, right? So I don't want to cop out. So I'm going to lean towards the term, invest the rest, only because being an insurance professional myself and life insurance being a huge product and service that we sell, I notice when people get the whole life policies, they're typically more expensive. there's less face value, because at the end of the day, like you said, it's a life insurance policy. Its core purpose is meant to protect your family. So I just can't see myself. Oh, sorry about that. I can't see myself, investing in something like where I could sell these people $1 million term policy for the same price as a $100,000 whole life policy, and God forbid something happened to them and it was the same price and they could have gotten that $1 million, versus the $100,000. And if you have the money, whole life is a great option, but realistically, people aren't going to. They usually won't keep it. It's usually too expensive, and they end up lapsing on it, or they won't keep it or something like that.
Got it. That's a good point. That's because
so I just think more people will. I think the likelihood of it being used for its purpose happens with the term policies versus the whole life policies.
Yeah, fair enough. And we can go. Maybe our next episode will be
absolutely. Yeah.
All right. So how can people learn more? You've got a Facebook group. Can you put the link after this? Can you comment on this?
Sure.
And with the link to your Facebook group, but how can people learn more about you, get more involved with you? Like, what's the best place for them to learn more?
It's Financial Street Smarts. It's a Facebook group, and we have nothing to sell. It's 100% for free. It's just a forum community where we, just talk about. I mean, that's why it's called Financial Street Smarts. It's for those of us that lacked the financial education that we should have got in high school or college, and it's just a whole new way of learning things that actually matter. And all I really ask is for people to participate, come in with an open mind, be civil to one another, and grow their own wealth and start generational wealth. And I'll be more than happy to put a link there. And there's no membership fee. There's no catch in any way. It's just a simple getting the information out there and helping people start their own path to financial freedom.
Love it. I love it. So you guys, Justin will put a link to the Facebook group in this Facebook video underneath in the comments section. So make sure you go join his group. If you want to learn more about the stock market and get advice from Justin, go join his group. So, dude, it's been great catching up.
Likewise, man.
So happy for you and your family and to watch you rise. And I can't thank you enough for providing all the value to the audience today.
Sure. Anytime, man. It was an absolute pleasure.
Awesome. All right, brother. We'll talk to you soon. Stay safe. And
Take
we'll
care.
see you soon.
You do the same.